Just as with several of the other cryptocurrencies, we are in the middle of a correction for Ethereum Classic. I'm calling this a wave 2 correction. And after our recent top around $77, we had an A wave down, a B wave up, and we have a C wave presumably that will take us down into the $53 range to $59. Somewhere within this purple box is what I'm projecting. And that's based on the fact that your A wave and your C wave often have equivalence or some kind of Fibonacci relationship. The alternate pattern shown in red here is that we're actually in a fourth wave consolidation, and we have a higher wave 1 coming all the way up here. And you may ask why I have a high wave 1 alternative. That's because in the alternate path, it is presumable that we actually had a bigger 1 to complete further back in time. Basically, we had a wave 1 peak on June 29 and a wave 2 on July 20th. Based on that count, we would have a nominally higher wave 1 complete probably somewhere in the $90 range. Either way, we're going to have a wave 2 pullback in which that would be a good buying opportunity. In order for this pattern to hold, we need to stay at $52.98 or above. If we do end up having this higher red pattern, I'll move the support up accordingly. The support is based on a 61.8% retrace off whatever peak we have. So again, that'll change if our parameters change. If we hold those things, you can purchase, you can ride this wave. Again, for purchasing, dollar cost averaging, keep doing your thing. Decent place to buy some lump sums if you want to. Again, divide that purchase up if you're planning to. If you do that, we should see a wave 3 take us up into the range between $111 and $121 for a wave 3. After short fourth wave consolidation, our fifth wave top should be between $127 and $136. I'm marking this lowercase Roman numeral 1 in parentheses in order to align it with our bigger chart, big picture. This is the Bitcoin Cash chart I showed in our our Ethereum Classic chart that we showed in our previous update. And we still have a similar picture. A couple of details here. Again, that wave 1 that we have, ideally we make it to $152, but on my pattern, we're not projecting that high at the moment. We may get there, we may not. If that's the case, it makes the larger extensions less likely. So we'll touch on it in just a second. But based on what we're seeing here, we may see a wave 1 get around here to, again, the $130 range. We'll pull back in a wave 2, which I don't have marked on this chart at the moment. And then we should be able to eventually grind our way up to that $391 target that I mentioned in our previous video. Now, if we don't quite get the wave 1 up to here, as I mentioned, all it means is that this crazy green alt extension here is not as likely. And this thing is showing, what is it, 1798 potentially on a much larger third wave. So again, it's not off the table. It depends on how we rally for our wave 1. If we rally very powerfully and hold a relatively shallow retrace for wave 2, we may make it there. But right now, I'm sticking with the purple pattern. That 391 target is still on the table. And the reason why this is not quite as bullish as the Bitcoin Cash chart is that, unlike Bitcoin Cash and to a lesser extent Litecoin, I'm doing this entire pattern as a 3-4. If you recall in the Bitcoin Cash chart, it's actually a large 1-2. We had a very deep retrace, and a 1-2 means you're going to have a powerful third wave following. In this case, might be the case, might not be. Again, I'm looking at this as a fourth wave just because it didn't retrace as deep. We retraced just past 38%, which is well within the bounds of a fourth wave consolidation. And typically you see anywhere from a 0.382 to a 0.618 extension for the fifth wave. And again, that's where the 391 top comes from. Once we get to this first wave, this larger first wave target, expect a scary correction for wave 2. Again, wave 2s are very quick, they're deep, they can catch you off guard, but they're some of the best buying opportunities. There's one other pattern I'd like to highlight. This is the scary alternative that I don't like to think about, but it's there. I can't ignore it. And that's that if our entire rally from March of 2020 up to earlier this year, May of 2021, is actually a very large wave 1 impulse. And if there's a wave one, you have a deep, fast, quick wave two. And relative to the length of the rally, we very well may be in the midst of a larger wave two. That's what this red pattern is. That red pattern insinuates that we have an A wave that completed with our pullback. We're in a B wave or fake out rally, what we call bull trap sometimes. And we may have a lower low in the C wave. The C wave marker is just purely demonstrative. Depends on where we could go. There may be an equivalence, there may not. But this falls below our red line of support. We're nowhere near this right now. It's not something I'm too worried about right now, but it's just something to keep in the back of our minds. There is a potential that this thing pulls back deeper and lower, but that's not necessarily the worst news. We'll have some warning. We'll have support levels that may or may not break in regular fashion, in timely fashion. Once we get down there, that would be a fantastic buying opportunity. So I'm always seeing the silver lining in the clouds here. But for now, we are, again, finishing off a smaller wave one. If we want the bullish pattern, we need this to extend higher. If not, that's all fine. Our 391 target is still on the table. So again, thank you for watching and happy trading.